Hello YouTube and welcome back to another video. Today we're going to be talking about Apple, which just had WWDC, or the Worldwide Developer Conference. And what happened? Well, not a whole lot. There was some there were some pretty nice updates, but there was nothing really earth-shattering. So as we're looking here at Apple, what we have to keep in mind is what we talked about on the weekend deep dive, where we do have that death cross here. And again, a death cross is when we have the 50 moving average crossing below the 200. And that happened on the 2nd, which I believe was last Thursday. So the question is this a bullish pattern? Is it a bearish pattern? As we reviewed on the weekend deep dive, which you can watch at the end of the video, we talked about how the death cross actually sounds very scary, but it is not always going to be a bearish sign. What I'm noticing here is that the low we put in at 144.9, again, is just below 145, which is a very busy strike today for this week. It is right around that low here at 145.81, which I was roughly considering what I would call a neckline if we're going to put in an IHS. So if we're going to keep that IHS, it means that this is a bullish pattern. And in my opinion, if this level here holds, it looks a little bit better. Is it a pass? I don't know. Because why? All the recent volume here is red. We do have a death cross, and not entirely sure. Apple's supposed to be the leaders, so what I found very ironic today, the WWDC event was long. It was like nearly 2 hours. Apple stock went up less than all the other stocks during the event. I noticed QQQ actually advancing more than Apple. That is very unusual for me when a company has the catalyst to drive us higher and they're the ones going up less. So again, what I'm not sure here is whether or not this is like a cup and handle. We got the cup, we got the handle, whether this is an IHS, or whether this is just a dead cat bounce before we resume back down. I don't know. So what I'm going to defer to is looking here at the weekly chart we were looking at. And what this tells us is that we're currently within a range. The range is going to be the yellow box. The yellow box goes back to our August 2020 all-time high, previous all-time high, to where we are now. And we can note that this downtrend here has been a very tough area for us to get through. We note that the key relative low is going to start right here at the pink line. That goes back to March 14th low of 150.1. As long as we remain below 150, I believe that Apple is currently in a correction mode. That does not mean it's going to go lower. It does not mean it's going to go higher, but the trend right now is a falling wedge. And it is not yet broken out like QQQ and like SPY. So what I would really like to see is some leadership from Apple. I want to see it bust this 150 area and reclaim its 50 weekly moving average. And again, as a reminder, the blue line right here is going to correspond with the blue numbers. So if you're wondering what that number is, it's 156.96. We got to close above 157 to close above the 50 weekly moving average. So what exactly did Apple talk about today? And again, we were looking for the potential to hear about an AR VR set, or an augmented reality, virtual reality set, that did not happen. And what I actually learned is that Tim Cook dresses just like Eminem, right? That's one of the first things I noticed, right? Tim is out there, right? He looks just like Eminem when you look at him. Anyways, just a little bit of a joke. So what actually happened today? They announced they announced some pretty nice things. I'm an Apple fanboy. I have everything. I got the MacBook Mini. I got the iPad Pro. I got the phone. I got the watch. I got the MacBook. I got the iPad Pro. I got everything, right? Apple TV. I got it all. And there are a few things that actually got me excited today to maybe want to purchase something. Notably, the new MacBook Air with the M2 chip. I thought that was pretty interesting. The MacBook Pro also has it. And there's some software updates. Like, they were mostly focusing on the lock screen for like 15, 20 minutes. And this is something that was actually released on the watch like 3 years ago. So a little bit underwhelming, but here's everything they announced. A new Apple software called iOS 16, largely anticipated. They always update it. All new MacBook Pro with M2 chip, and it's also fanless. That's pretty interesting. It's pretty innovative too. New MacBook 13-inch Pro with M2 chip. New Mac software called Mac OS Ventura. New iPad software called iPad OS 16. There were some pretty cool updates on iPad OS as well. Again, we're here to talk about stocks and making money, so we're not going to review all the feature sets. I encourage you to watch anything online if you want to know more about that. Apple Pay Later, right? Yes. I noticed that too. And that was pretty interesting because it sounds just like a firm. And if you remember, Apple had a partnership with a firm where you could buy now, pay later. And we can note that, what did a firm close down on the day by? 5%, right? A firm closed down by 5% because Apple basically announced something that's going to remove the need for Affirm. They announced buy now, pay later with no interest, which is what Affirm's business model. So thanks for the R&D, boys. Now we're going to go and take this and make it our own. The tap with Apple phone was also very interesting. I really like that. And that looks like it might be a competitor to Square, where I don't have the screenshot up. Actually, let me see if I can find it really fast here, because I found this part here really, really, really interesting. Also, the car thing with the keys. I found that quite interesting, too. So here's the picture of Tim, where he looks like he's like Eminem, right? Let me see if we can find this picture here. Here we go. There's Tim Eminem, right? He looks just like Eminem. If you pull up a picture of Eminem, he looks just like him. He's dressed like him. He's moving his hands like him. This man has some style. And he was not actually giving most of the keynote address today. It was very interesting. All right, let me see if I can find this. Here we go. Here's the image I was talking about. So a lot of people are familiar with tapping your card on a Square device. But something we learned about today is that you can now tap your credit card onto an iPhone, and that is like PayWave, where you can actually pay using your iPhone. You no longer require a separate device like a Square or like something else. So what I really saw today from Apple was a lot of copying, where, again, they're launching Google Maps, or they're launching new Apple Maps, right? A copy of what Google already does. They're announcing what Square already does. They're announcing what Affirm already does. And it was a little bit underwhelming, to be honest. There's some nice updates, like I said, but for a leader, I was really looking forward to that AR. I wanted something else, right? Just one more thing. Did not quite get it. So it's not terrible. It's just, there was some anticipation built up into this. And the final thing that I found really interesting was just the key things for Apple, where they talked about how they can actually, they can now have the car. There was a lot of car manufacturers which were included in that in the screenshot where they showed all the partners. And they were talking about how you can actually unlock your phone you can unlock your device, like your car, using your Apple device. And they also announced a really cool update to CarPlay, where you can now actually use the whole dashboard. And what I saw this as is the precursor to them actually launching the Apple Car. What I know about Apple is that they rarely launch a feature first, which means they're very rarely the person who is creating the new category. What they often do is they copy what other people do and make it a lot better. I'm talking significantly better, make it the best. And that's why Apple is arguably the most successful company in the world. So what I'm seeing is all the framework needed for them to eventually launch that car. But if we think about, are they ready to launch the car? I don't know. They didn't even talk about the AR set. So I think the AR set is going to be a really big deal because there's a lot of things they could do with that. And I believe that they're still working on the car, but they didn't even talk about it, didn't even tease it. So I think that the next big announcement from Apple is going to be the AR set. And then we have the car to look forward to later. Right now, every car manufacturer is having issues, Tesla included. So why would they be out there talking about something that they might not have full confidence in? That's really what I heard today. All right, so there we go, right? That's Apple. We talked a lot about them, and I personally love Apple. I'm ready to buy I have a MacBook, the MacBook, the simple one, and I am quite excited about the new MacBook Air with the M2, the Retina display, the fanless module, and looks pretty cool. Looks pretty slick, not gonna lie. All right, so we got through Apple WWDC, which was the big event for today. Other big events we have for the week are going to be the ECB rate decision coming up on Thursday, and then we got core CPI on Friday. And this is going to be super, super important. Why? Oh my goodness, is their money expiring on June 17th, which is going to be monthly OPEX or next Friday. Look at that number. Yes, you read that correctly. That is $3.2 trillion in notional value expiring. It is huge. So again, here from Zero Hedge Goldman, June's OPEX is literally massive. Repeat, massive. $3.2 trillion. And the equity market in the US is worth roughly $25 trillion, give or take, which means that almost about 13% of the value of the entire stock market is expiring when? Tomorrow. Sorry, not tomorrow, next Friday. That is huge. And what I did, again, just looking here as well, we can note that the biggest block in terms of options expiring is going to be SPX or the index. And then we got the E-mini futures, 225 billion, right? 1.7 trillion, over half of the total value expiring. Non-SPY indexes, that would be like XLF, XLK, QQQ, 94 billion. SPY, 175 billion. SPX pre-market, 135 billion. Non-SPY ETFs, right? Then here we got pre-market settlement, 315. Single stocks, 560. So the reason why I'm pointing this out is because this 1.7 trillion here sticks out like a sore thumb. And I went through and looked this morning. What I noticed is straddles. So we got a straddle here at the 16s, or the 16 strikes, which are the most likely going to pay out. 8 above, 8 below. And we got a perfect straddle here. 36,000 at 41.50, 36,000 at 41.50 puts. Then I look forward to beyond the 16s, and there's straddles everywhere. Roughly 100,000 here at 4,000, roughly 15 at 40.25, roughly 30 here at about 40.50. We got about 40,000 at 4,100, and then we got 36,000 at 41.50, which I pointed out. And then we got about 44,000 at 4,200. So what a straddle implies is that there's going to be a big move. So I'll just read my note here really fast. The theme to me is straddles. This implies a big move implied. Direction matters less, but more premium attached to the calls right now. So burn one side this week, other side next week. That's what I would assume. And what that means is that, actually, one more thing I forgot to point out here on Apple is just the gap that's left here on the daily chart. I forgot to talk about that. So there's still a micro gap here. The high is at 14434. The low we put in last week, 14446. There's a tiny little gap there. Everything else has already filled it. Maybe it'll do it. All right, looking at SPY. So SPY, okay. So there's $3.2 trillion expiring in less than 2 weeks. And we note that there's straddles, right? It straddles everywhere. So what that means to me is that they're likely going to want to move it in one direction to start and then in the opposite direction to finish it. And we note that we have CPI coming up on Friday. That could be the catalyst. It's what I'll be paying attention to. Secondly, next week, what we also have is the FOMC meeting. So that's the Federal Open Market Committee, and they're going to be meeting on June 14 or 15. And again, the 15th is going to be the date when we have the press conference, the rate decision, blah, blah, blah. We have the same thing coming in from the ECB on Thursday, which could be a preview for it. However, on here, we're also going to get a summary of economic projections. So before we have this expiry on June 17th, again, we can note here by just looking at the top here, June 17, monthly expiry in 12 days. We have CPI coming up on Friday, and then we got June 15 FOMC meeting, with Jerome Powell's talking. So I don't know what they're going to talk about, but I'm looking at those 2 dates as being the key catalysts to move us higher or lower. So if we start moving dramatically up or down, I'm going to believe it. And right now, we're going to look through and see what the technical chart tells us, because we were due for a massive gap up this morning, and we got it. I took advantage of it. I traded overnight, sold it in the morning. We gapped up, sold off. So now what we want to ask ourselves is there anything that has fundamentally changed here to SPY? And I don't really think so. When we look here, it looks a lot like other charts. So again, we note that we got, let me just make sure I don't lose my drawings, but I'm going to delete this. We can note here that we've talked about this on the weekend too. Encourage you to watch that video. We have our inverse head and shoulders, right? Let me make it a little bit easier here, right? There's the shoulder, there's the head, there's the shoulder. So if we do come back down to 405, that could be an area we're paying attention to. However, if we look at the low from today, it's 450.55. That is almost perfectly back to our Q1 low at 410.64. So right now, again, if this is the low of the week and we push higher from here, that would make perfect sense to me. We back tested a key support area, and we bounced. So that's important. We have a bullish pattern. We also have a W inside of here, or we have a cup with a handle. I don't know exactly what it is. We also noted over here that on SPY on the hourly chart, we've been seeing tests on the 50 EMA. So if we go back to when we were going down, started going back up, what do we have? Tested 1, 2, on the third time it broke higher, which is the classic W leading to a breakout. Then we look here, what do we got? Well, not even quite one test yet. Close enough to one test, dump it down. One test, dump it down. Come back up powerful and strong to test it a second time and then lose it. Wouldn't that kind of align like what we're looking for later in the week? It kind of would. So maybe that's our first test here, right? Maybe that's test number 1, right? Number 1 right here. I can't draw, I'm sorry. Right here could be number 2, where if we're able to push up to roughly 420s, that could be our second test. Then we come back down and then build up pressure to finally release it. That would also look roughly like this. Come up, lose it, build pressure, and then release into when? Post-OPEX. That's what I could see happening if we're in a bullish pattern. If we're not in a bullish pattern, and again, looking here at our chart as well, we're looking for that IHS. That's the potential. If we're bearish, what I would be looking for would be a break of last week's range. So again, we can note here that the range from last week has a low of 406.93 and a high of 417. I think that whichever way this breaks is going to be the next move. But it might be a trap because of what I just mentioned before regarding all the options. So in terms of where SPY is going to go, all we have to do is pay attention to the levels. It's that simple. And the levels right now are 405 for that daily IHS, 410.64, and then we got 415, which is a psychological area, and then we got roughly 417.5. The splitting the difference between 415 and 420 means we're going to print a weekly higher high. That's pretty much it. If we now look over here to the broader market, we can see that it's getting a little bit better. And right, we can note that the trillion-dollar companies are either flat or up. Only Microsoft is down. Amazon, Tesla, Facebook, Google are up. I don't want to talk about Tesla today, but you probably saw the news. Elon Musk is doing everything possible to walk away from this deal. Kind of just seems like he wants to sell stock. And I think this is a better way for him to save face. But I think his reputation is being tarnished here because he kind of looks like a flip-flopping, right? Looks like a flip-flopper. And it's not a really good sign for people who are looking to do business with Elon because I like you today, hate you tomorrow. That's kind of what it seems like to me. So, right, dead cat bounce on Tesla. And Tesla also had that, do I have it over here? I think I do. So Tesla has that exact same pattern as Apple, where it rejected off the 50 and has the death cross, which was our subject matter for the weekend deep dive. So anyways, not a lot of big pockets of red, not a lot of big pockets of deep green. So it's pretty much a meh. Gap up, sell it off, which is normal, right? Gap ups are for selling, gap downs are for buying. We look here to the broader market and we note that, we're actually creeping a little bit higher, over to 30, from 27 to 30. That seems pretty good. It's constructive. Is it enough? We'll find out next Friday when we are either at, I think we're going to land on one of these round numbers, 400, 410, 415, 420. I do not know, but that's what I'm paying attention to. All right, now let's have a look at a couple more charts and wrap it up because I did the rest on the weekend review. SPY, QQQ, both green, roughly on par. DXY, let's look at QQQ really fast here. So higher high, higher low. That looks pretty good on the daily. Let's look at the weekly now. Inside bar, right, trying to bounce here. Inside bar, it's not quite sure what it wants to do. Has the falling wedge, it's broken. Needs to start advancing though. It's bouncing off the green line. Got to get more. DXY, bouncing here again. We just saw that Boris Johnson's now been, he's passed his confidence vote. The dollar's been moving quite a bit today just based on the headlines of energy in Europe. So we're going to pay close attention to that. And the dollar also is in a bullish pattern. So we got to pay attention to it as well. VIX still at 25, closed higher. TNX back above 3. That's notable, right? Bull pivot right off the lower part of the channel here, or this box we're looking at here, the yellow one, right? The zone. So we note that back above 3 is very notable. It's kind of doing the work for the Fed, which is what they've been saying the whole time. Right? We'll jump down here to the DAX. DAX had a pretty nice move today, right? Forming a definite W. So on the weekly here, right? Looking like a dub. Looks like it wants to go higher. And then looking here back to where we bounced before, right? 2018, 2020 highs is where we found support and where we ultimately bounced. That's nice. Looking at the daily as well, it's already well above the 50 DMA, which is what S&P is currently struggling to get back over. So watching close. It's currently hitting resistance, so let's see what it can do. 1, 2, 3 tests. If it's going to break, it should be now. Oil, whatever, closed flat, gap up, sell it off. Gold, a little bit down, right? Bitcoin up. This is what we wanted to see. Still an inside bar, still not above 33,000 for a bull break, but looking a lot more constructive. Big move happened overnight. Same thing with Ether, but not as strong. And what's particularly notable here is that Ethereum is usually an amplifier or has more beta than Bitcoin. Not now. Bitcoin's up twice as much as Ethereum. That's very notable. For the rest of these stocks, we did a much deeper review on the weekend review. So if you want to watch that, I encourage you to watch the video that'll queue up here in a moment. Otherwise, I thank you for watching. I look forward to seeing you tomorrow. And I wish you all the best of luck for the rest of the trading week. Thank you for watching. I look forward to seeing you tomorrow.